Dear Bravehearts, while India celebrates the 21st anniversary of the Kargil Vijay Divas today, I want to personally thank you and everyone there in the Indian Armed Forces on behalf of the entire Indian population for your sacrifices. The love for nation, the integrity and the passion you demonstrate truly mesmerizes me each day. And I wonder if only that rest of us could empathize your efforts and imbibe some qualities of you, we would be a great nation in the history of this world. Your conduct of the safety, honor, and the welfare of your country come first, always and every time. The honor, welfare, and comfort of the men you command come next. Your own ease, comfort, and safety come last, always and every time, and our salutes to this. We sleep peacefully each night since you're awake. Words and pages not enough to write on your sacrifices for our happiness. I take this opportunity to launch an exclusive money talks for you, the heroes, while you safeguard between us and our enemies. I promise you today, with this first of its kind initiative in the world, I stand between you and your wrong financial decision, if any, being influenced by any fraudulent or missellers. With this initiative, I would do everything possible to simplify the gamut of financial products to help you take the right decisions. Also, hereby assure the Indian Armed Forces that a part of my earnings from the YouTube I shall contribute to Armed Forces Welfare Fund. Request you watch my videos at your comfort and keep sharing to ensure you have a great financial future. While I pray to God to give all of you a great strength, glory, success, and life of happiness, my suggestions from these videos will ensure your family has an enhanced family financial security, God forbid, in case something goes wrong and in your absence. With that note, let me welcome you to our today's learning on fixed deposits. Please take few seconds to click on the subscribe button so that you will get the update as and when I upload new videos on financial literacy. So welcome all once again for our learning today on fixed deposits. Some of you probably might have some questions which could be gnawing for a while, that where should I open my fixed deposit? What are the key benefits? Are there any different types of interests? I heard someone saying there is simple interest too, and there is a compound interest too. If so, how does it work? Can I understand the interest calculations? And most important, I've also heard I'm too apprehensive about tomorrow's inflation. I heard people talking about inflation is going to eat away most of my earnings. And most important, I may have a fixed deposit. Have I done the nomination? Or in case that I need to open a fixed deposit account, what are the formalities and whom should I nominate? And why it is important? We will try and address all of them in today's learning on fixed deposit. Welcome once again. Let us try and answer our first question and the curiosity all about opening a fixed deposit account. As you're all aware, fixed deposits are ideal for investors with a low risk appetite. That means for someone who's not willing to take a large amount of risk investing in equities, and someone who's looking forward for an assured return. Fixed deposits allow investors like you to deposit your money for a specific period of time in expectation of a rate of interest which is typically higher than a regular savings account. So you may have a savings account which probably must be giving you anything between 3 to 3.5%. That's a kind of return. So if some of you thought about, can I think of earning more interest? Can I think of parking my money for a while? I don't think so. I need to touch this money because I have some aspirations in life. Can I expect a better return compared to savings account? Fixed deposit is one of the finest solutions for you. So, where to open an account now? You can visit any of the authorized bank or a nearest post office to open a fixed deposit account. And the next question, is there any kind of the minimum amount? Well, you can actually open fixed deposit with as low as 1000 rupees. And for your information, most banks today offer you a minimum period of 7 days. But note, the number of days or the duration is subject to changes. And the third question, how my interest is calculated? Well, it depends actually on the option that you choose at inception. What do you mean by inception when you're opening an account? Are you looking for a cumulative? That's a compounding. Or you're looking forward for a non-cumulative. For someone like you, in case that you feel, I don't think so, I need to touch this money for a while, I would like to park this money for X number of years. And I shall talk about the duration, etc. a little later. Say an example that I want to park it for 5 years. I don't need this money right now. I have already set aside some money, or I have some money ready in my liquid fund, or probably an emergency fund, or let's say your savings account to meet some kind of emergencies. So, as and when I need some money, I'm going to withdraw from there. But I have some more money left with me, which I would like to park for a while. And this money, I don't need it. So this is where you can opt for cumulative or the compounding effect kind of interest. Non-cumulative, you need some kind of flexibility. You want to withdraw some money as and when you need. That's where the non-cumulative fixed deposit helps you a lot. The next question, where will I get the interest credited? At the time of opening the fixed deposit account, the banker would definitely ask you for your savings account details. So, the savings account of your choice, the interest gets credited there. Can I get the tax benefit? Indeed, yes. That's a great news for you. There are specific tax saving fixed deposit account, but note, you cannot touch this money for minimum 5 years. Having said that, you would also enjoy the tax benefit under Section 80C. You can claim deduction for maximum 1,50,000 rupees under Section 80C. So far, we understood basic details with regard to opening of a fixed deposit account. And now it's the time for us to understand the key benefits what a fixed deposit would offer you. Number one, it encourages you the habit of saving. What do I mean by that? Your small savings can actually lead to a bigger investments with or without your knowledge over a period of time and helps you achieve some of your financial goals. Now, when I say financial goals, it could be anything. Probably you would like to gift a best of jewelry for your loving wife. Maybe that you contemplated to keep aside some corpus or money for your child education. Or probably you must be thinking about buying a brand new house or a brand new car. Fixed deposits encourages the habit of saving. Number two, and most important, is it's a safety option or the safe option. The reason is fixed deposit have no market related risks unlike any other investments in the financial market. Third, and most important, you can actually avail a loan anything between 80 to 95% of your deposit. And note, the loan percentage vary from bank to bank, and I request you to check before you apply for the loan. Fourth important benefit, it's a guaranteed return. In the world of VUCA that you and me live today, when I say VUCA, the volatility, uncertainty, complexity, and ambiguity. We do not know what is tomorrow because we live in the world of uncertainty. No one expected actually the pandemic like corona. No one predicts what's tomorrow's share market. So when we live in this kind of, the world of uncertainty, our investments, in case can offer a guaranteed return, there can't be any better news than that. And fixed deposits offer you a guaranteed returns. What they promise you at the beginning, you would receive on maturity. The fifth and the most important, the benefit of fixed deposit. Depositors get an assurance, mean to say, the deposit insurance of 5 lakh rupee in case the bank defaults. What do I mean by that? Each depositor in a bank is insured up to a maximum of 5 lakh rupee for both principal and interest amount held by you or anyone for that matter, and the same right and the same capacity as on the date of liquidation or cancellation of bank's license or the date on which the scheme of amalgamation or merger reconstruction comes into force. So, even in case the bank defaults, your 5 lakh rupee is assured. Now it's a time for us to learn the difference between cumulative rate of interest and non-cumulative rate of interest. So here in this slide, I have differentiated between the two types of interest rates in 5 numbers. Number 1, when we speak about cumulative rate of interest, note the collection of interest. That means the interest which is accumulated till the end of the fixed deposit tenure or the period. So you're going to get paid at the end of the tenure, that is on maturity. In case of a non-cumulative interest, instant payment of accrued interest means basis your liquidity request or rather the liquidity crunch as and when you need, and if there is an emergency, you can always withdraw interest. The second important difference is in case of a cumulative interest, the interest actually gets compounded or reinvested so that you get the power of compounding. Naturally, you make a better interest in case of a cumulative interest rate fixed deposit compared to a non-cumulative interest rate where the interest is not reinvested but paid at intervals in this case of fixed deposits. The third difference is cumulative interest fixed deposit helps you to accumulate better interest on maturity because of power of compounding. In case of a non-cumulative interest, that is the fixed deposits offering the non-cumulative rate of interest, interest earned is comparatively lower because banks are giving you all flexibility to withdraw when you need. Fourth difference under cumulative interest rates offering fixed deposits, it's a one-time payment of interest income that is on maturity, which I've told you earlier. And in case of non-cumulative interest offering fixed deposit, regular flow of interest income. The fifth important, the difference is it's suitable. So when I say cumulative rate of interest offering fixed deposit, it's suitable for salaried people like you or the investors like you and for those who have a stable income. But how about those who do not have a stable income? That means those who have an unstable or no income like retirees. There could be some freelancers, housewives, etc. Non-cumulative rate of interest offering fixed deposit makes a lot of sense. At times, there could be some arguments at home. There could be debates at home. The discussions at home Probably you may have an internal debate. Should I choose fixed deposit or shall I go and buy the gold? Now, here are the differences between fixed deposit and gold. If so, what is better? Fixed deposits. It's suitable when you need to support your existing income. Well, you have a regular flow of income. You would like to set aside some kind of money for a future financial goal. Fixed deposits comes to you handy. Gold, it's suitable when you're looking for growth, especially for a specific financial goals. Well, there are people who might even think about buying exchange traded funds. Now I'm going to talk about exchange traded funds in a while. Fixed deposit. The rate of return is fixed. In case of gold, returns from gold can fluctuate depending on the market conditions. You have observed in the last 7 months, the gold and the investments on gold have given much more than 26% kind of return. Well, the same may not be the case all through the year. So one should really consider the last 10 years or the 15 years, and you should be very rational in terms of taking decisions, and there should be a logical approach before you decide between fixed deposit or gold. Next, fixed deposits. You can choose your fixed deposit tenure and deposit a lump sum amount but cannot add to that amount. That means once you decide that this is the kind of money that I'm going to set aside or pocket in fixed deposit, you cannot actually add, you cannot add more money into it. In case of gold, it is liquid in nature and you can sell easily during emergency times. Now come to the fixed deposits. Higher the tenure, higher will be the return. That means longer you park, higher the possibility in terms of earning better return. In case of gold, you can choose between physical gold and other forms of gold such as exchange traded funds, e-gold, gold saving accounts, gold funds, etc. So, I was talking about paper gold or the ETFs, right? So you have all the options to choose between regular gold, that means hard gold which you buy, or a jewelry, right? What I mean is the jewelry. Please note, you end up paying a lot of money towards the making charges when you purchase. And also, when you sell, you end up losing on the making charges. On top of that, there is a high possibility of theft, the burglary I mean. So, when you want to deposit the gold which you bought in the bank account, a safe locker, you end up paying again cost to it. Next, and most important, you must be thinking, look, should I really think about jewelry or can I think of something else? There are experts who also suggest the bullions, right? So the gold, biscuits, they basically talk about. Naturally, you would get the same value. You don't lose actually on, the making charges. The other options that you can think about is e-gold, that means a paper gold. Either it could be in the form of a bond, but note, bonds offer you a lesser rate of interest and there is a lock-in period for that. However, gold ETFs makes a lot of sense because the rate of return will be as per the index or the market price of the gold as per the day. Coming to the fixed deposit. Tax saving fixed deposits provide an income tax exemption under Section 80C with a lock-in period of 5 years. As I've said before, you can claim deductions through fixed deposits up to 1,50,000 rupees under Section 80C. Though it's not an actually apple-to-apple comparison, and I equally encourage you to have some investment towards a gold as a part of your portfolio. But too much is always too bad, and fixed deposit makes a lot of sense to you. It's a time now for us to understand how the cumulative and the non-cumulative rate of interest are calculated. So here I've taken the first example for a non-cumulative fixed deposit the kind of simple interest, how do they offer? As you're all aware, it's quite simple to understand how a simple interest is calculated. I've taken an example of a person who deposits 1 lakh today over a period of 5 years. And the bank in this example is offering 8%. Note, it's just an hypothetical number because the rates are subject to change and no bank is offering you today at 8% fixed deposit rates as such. Right? Now, I'll repeat once again the example. Someone like you has chosen a fixed deposit under non-cumulative option, the interest rate, and you have decided you're going to park this money for 5 years and 1 lakh rupee you want to park and the bank has promised you 8%. So how do we calculate the simple interest on this? That means at the end of 5 years, what is that I'm eligible? Formula is very simple, as I've already shown you in the slide, and I shall also explain this in one of the coming slides. How do we calculate step by step? So formula is simple. P stands for the principal, that is your 1 lakh. R stands for the rate of interest, that is 8%, into the number of years, that is 5 years. So principal into rate of interest, right, into the number of years you're going to park the money, that translates to 40,000 rupees interest. That means over a period of next 5 years, you have earned 40,000 rupees at the rate of 8% on your deposit of 1 lakh. So, bank shall pay you on 5th year, at the end of 5th year rather, the principal and interest put together 1,40,000 rupees against your 1 lakh deposit. I hope it's clear. Well, it's now the time for us to understand how fixed deposits, which offers you compounding effect, or cumulative rate of interest, fares better compared to fixed deposits, which offers a non-cumulative or a simple rate of interest. In this slide, I have taken the same example of someone who wants to deposit his money of rupees 1 lakh over a period of 5 years, and the interest rate is the same, that is 8% being offered by a bank. So, how do we calculate the compounding effect or the compound interest or the cumulative rate of interest? The formula is very simple, which once again I shall explain you in the next slide. So, the formula P stands for the principal, that is your 1 lakh. Open the bracket, double bracket rather. You can calculate this even in Excel function. I'll help you to in the computer. How do we do this? It's very, very simple. So P, open the double bracket, 1 plus the rate of interest. Close the bracket, hold to the power of n. N stands for the number of years minus 1. Note, when we calculate the cumulative rate of interest or the compounding interest, we shall consider the interest being given to you the last year too. Means to say, if I'm calculating the rate of interest for the second year, I shall consider both the principal as well as the interest which has been paid to me the last year. That's how year on year, when we start adding the interest of the previous year, which is accumulated, so naturally you will have a better compounding effect. Now in this example, against my 1 lakh on maturity, that is on 5th year, I have got 46,932 rupees 81 paisa extra. Means to say, compared to the non-cumulative, the kind of rate of interest what the fixed deposit offers, are fixed deposits which offers a simple interest or a non-cumulative basis. There I earned only 40,000 rupees, and here I got 6,000 extra. That's the power of compounding. Well, I thank this opportunity you have given me to guide you through and simplify the gamut of financial products, fixed deposit being our first product. So far, we have understood what is fixed deposit, how it will actually help me, where can I open my fixed deposit account, what are the different types of fixed deposits available for me, what's the difference between cumulative rate of interest and a non-cumulative rate of interest, is there any difference between the cumulative and non-cumulative rate of interest, and between a gold and fixed deposit, which one actually fares better? The key advantages. And now it's a time for us to learn in depth and we go apace to understand how did I calculate the simple interest and the compound interest. Alright, so this slide gives you a complete clarity. Now let's look at the simple interest first. How did I calculate? For a 5-year, a simple interest is equal to, that is 1 lakh of your principal amount which you have deposited, and the bank has assured you 8% return over a period of 5 years. So the calculation is very simple. 1 lakh into 8% into 5 years is equal to 40,000 rupees. Now, compound interest, that is for fixed deposits which offers the cumulative rate of interest. How do we calculate the compound interest? So the first year, it's quite simple. 1 lakh is your principal amount. The bank shall calculate straight 8%. That translates to 8,000 rupees. That's your interest earned. The second year, since you're not withdrawn that and you can't withdraw this money, bank actually reinvests the same. And as a part, naturally, they give you a compounding effect in terms of your interest. So 1 lakh is your principal amount, the second year too, plus the bank considers the 8,000 rupees what they pay to you. That means the money which is added to your account, right? 8,000 into 8%. As a result of compounding, as a result of considering the previous year's interest, have a look at this. You got 8,640 rupees the second year. Now the third year, it is 1 lakh, it remains the same, the principal amount. And this year, the third year we consider, or rather we take into consideration 8,640 rupees which has been paid to you. That means added to your account, which is literally not paid to your, to you as such. You haven't withdrawn that, which has been added to your account. So 1 lakh is your deposit plus 8,640 of the second year into 8%, and this translates to the third year you've earned 9,331.2 rupees. Congratulations. The fourth year, 1 lakh, your deposit remains the same. Now the bank considers the third year interest, that is 9,331.2 rupees into 8%, and on fourth year you made an interest. You are eligible for an interest of how much? 10,077 rupees 0.69 paisa. Well, here comes the fifth year. 1 lakh is your fixed deposit. 10,077 rupees 0.69 paisa of the previous year, that is a fourth year. So you've earned 10,883.91 rupees. Now you have understood how the banks calculate compound interest and the simple interest. You've also understood how you earn 6,000 rupees extra in case of compounding effect, or the fixed deposit in case you opted if it is offering the cumulative rate of interest or on the compounding basis against fixed deposit which offers non-cumulative or the simple interest. I'm delighted. By now, I'm pretty sure that most of you, those who have fixed deposit, are excited to know how the rate of interest is calculated. And for a first timer, you have understood what's a fixed deposit, where can I open the fixed deposit account, what is the difference between a cumulative rate of interest and a simple rate of interest, What are the key benefits of a fixed deposit and how it is going to help me in terms of achieving my financial goals. We have also understood if in case we were to make a decision between a fixed deposit and gold, what matters the most for you? Now, we have also understood how do we calculate cumulative rate of interest as well as the simple rate of interest. Here it's a time for us to think something beyond the rate of interest, what we have been delighted about. Dear officers, the point that I'm trying to drive here is the impact of inflation on our earnings. As all of you know, it is so scary even to think about inflation. The reason being, inflation is actually expected to eat away all our earnings in case we don't plan our finances today or investments today prudently to outdo the inflation. So the question is, will my fixed deposit outdo the inflation? Here is an example, and I have taken again an hypothetical number. Alright? If the rate of inflation during a 5-year investment period, let's say it is around 7%, and to keep the purchasing power intact of 1 lakh after 5 years, the after tax maturity value must be 1,40,255. What do I mean by that? It's very simple. One of you decided, or rather some of you decided, I'm going to have a fixed deposit. I will open a fixed deposit today of 1 lakh. 5 years from now, assuming the inflation is at 7%, that means what you can purchase today at 1 lakh or with 1 lakh, if you want to purchase the same item after 5 years, considering 7% inflation, that item would cost you 40,000 rupees extra. Say an example, you are excited and you love to buy a Sony television or an LED or a curved TV. If today the Sony Android TV costing you 1 lakh, it is expected to cost you 1,40,255. That means 40,000 rupees extra, 40,255 rupees extra at the rate of 7% inflation after 5 years. Now, thinking you're going to buy a television or an LED after 5 years, you have done a deposit of 1 lakh, but the bank is offering you 6% rate of interest. Note, there's a difference, right? A 7% inflation on 5th year, a 6% rate of interest which you're going to earn year on year, and that's the kind of money you're going to earn, or rather the return is expected to be in your account is 38,000 rupees extra. Means at a 6% rate of interest which the bank promised you today, you are going to earn 38,822 rupees extra against your 1 lakh of deposit on 5th year. But the inflation on 5th year is 7%. On the Sony television or the LED costing you 1,40,255 against the fixed deposit return you got 1,38,822. That means you have to pay from your pocket 1,433 rupees extra. I'm sure by now you must be surprised. Oh my God, what should I do now? So that's the reason you have to be pretty careful when you're choosing your investment. While I talk about different investments later, when you consider fixed deposit, you should also consider the inflation. Often I keep hearing individual investors or the depositors talking about the family disputes or the feuds or the concerns, challenges, fights, arguments, and whatnot. You know the reason? Many a times the depositors like you and me would make a mistake of not ensuring a nomination. Please see to that. It's very important and utmost urgence. The next time when you think about a fixed deposit, you must have a nomination. Nomination can be anyone for that matter. But see to that it could be your spouse or your parents or your children, not a third party. Always exercise the nomination. And this option is available naturally once you fill a fixed deposit form. God forbid if something happens to the depositor, the nominee, without any challenges or the concerns or probably cases in the court of law, the nominee can claim this money straight to our account. That actually gives a lot of peace of mind. Dear officers and the brave hearts, you stand as a wall between our enemies and us. And I promise you today, I will stand as a wall between you and the wrong guidance of the fraudulent sellers. Dear officers and the brave hearts, in the world of selling, there is a high possibility of mis-selling for the sake of revenue. I have come across many instances where people try and push maximum revenue products and the products which gives them the maximum incentives. Very rarely an actual financial planning happens. But I am there for you starting today. If a well-known cricketer and a celebrity cricketer even today being misguided by his own friend, and later on I have to intervene to help him to come out of that particular product with almost 10 days of dwelling, and today he is so happy. If a director, inspector general of police from Karnataka can be misguided on his retirement corpus of 75 lakhs, if a well-known film actor can be misguided, there is every possibility that you may get lured or may be misguided. Note my email ID. Where need be, should you need some clarity on some investments, feel free to connect with me. Having said that, do not get carried away by any fintech companies in case they're talking about we will offer you free financial planning, share your mobile numbers and your email IDs, etc. Please note, your mobile numbers, your email IDs have been sold in the open market for 2 to 5,000 rupees by these fintech companies. Beware of this. Thank you so much for your patience so far in learning fixed deposits. By now, most of you must be wondering, who am I? And what makes me come forward to get into the YouTube channel and an exclusive program for the Indian Armed Forces? Dear officers and my dear brave hearts, my name is Anand. I'm a practicing learning and development specialist and also a senior consultant for setting the L&D and also the OD, the organizational development for most of the startups in India. I'm also a leadership coach and I spend a lot of time in coaching the CEOs across most of the startups. I've spent close to around 20 years in some of the big brands in India, starting from the General Electric, Aditya Birla Group, MetLife, Max Life, and I've also handled the known brands, especially in the world of banking, Citibank, Deutsche Bank, Karur Vysya Bank, Development Credit Bank, Axis Bank, and today I'm also an empaneled consultant for some of the big brands once again, Axis Bank, IDFC Bank, the IDFC First Bank rather, and the India's number one HDFC mutual funds, Canara Robeco, L&D, you name the financial organizations. Today, Anand is a well-known name in the industry, even in managing the investor awareness program. Having said that, I take Also, a pride in sharing with you that I have trained the Indian Navy officers on the power of financial planning, as well as the respective sailors. I will stay in touch with you, and I definitely come back once again with new programs, new videos on new products for you. Thank you once again. Congratulations on your new learning.